I'm sure you've been there before. You get into a trade, you get a slight pullback, and you sell for a small 10% gain just to watch the position run over 1000%. Now, with this one simple indicator, I'll show you how you can eliminate doing that and start letting your winners work for you. Let's get into it. Before I get started, it's almost impossible to buy the low and sell the high. You may get lucky, maybe once in your lifetime where you do this, but it's almost physically impossible to do. But using the 9 EMA, which I'll be talking about, is a great way to maximize your gains and hold your winners longer. And with this one simple trick, you'll be able to hold your winners for longer and bigger gains. You may be asking yourself what the 9 EMA is. The exponential moving average places a greater weight on more recent price action. During days where the market is trending or is a clear direction, the 9 EMA is a great indicator on when to close out a position. Now let's go over some examples. Now we're inside of Thinkorswim, and what you want to do, you want to come into Thinkorswim, hit Control E, it'll bring your studies up, type in exponential or EXP, hit the third one, moving average, and what do you know, by default, the 9 moving average. You come in here and modify it. I like to make it like a nice blue, and apply. And look what we have here, the 9 EMA on your chart. And let's go over some examples. All right, so now we're looking at Tesla, the best stock in the world, Elon Musk. Let's go. On May 20th, 2022. Now, of course, we're looking at this in hindsight. We know what's going to happen. But in the future, I plan to do some live trading videos where you guys can watch me process and use the indicators real time. But for now, we just have hindsight trading. As you know, we're hindsight millionaires here. Now, moving forward, if you have a bad entry, the 9 EMA is not going to help you save your entry. And I'll talk about this further on in a different video, but having a great entry is going to make this technique a lot easier to use, and you won't have any drawdown in your trades, or as little drawdown as possible. So let's just say your plan on Tesla was to short the stock. It consolidated right here at 708. It broke these lows. So let's say you got into a trade right here, and look what happened. You're not going to sell your position until it closes back with a 9 EMA. On the 5-minute time frame. I personally think the 5-minute time frame is the best time frame to use while trading, or as a guide for the 9 EMA. The 1-minute 9 EMA is pretty good for getting entries, but I think the 9 5-minute EMA is the best thing to do to guide your trades and let your positions work for you. So Tesla's selling off. It's sold off about $40 so far. Look what happened right here. It formed a nice little bear flag. It didn't break above the 9 EMA yet. No closes above the 9. It continued to sell further off. Now we're down to 660. And right here's the first close above the 9 EMA. If you didn't lock, I always suggest locking in profits on the way down. So for example, if you took 3 contracts here on Tesla, maybe on this first initial flush you scale out 1. Bear flags down here, you maybe scale out 1 more. But the last contract is a runner. You just try to hold this last contract for as long as possible. If you have time on the contract, even better. But if you have a weekly contract, it's definitely a little bit more nerve-wracking to hold your position. But using the 9 EMA definitely makes it a lot easier. So we continue to sell off. You got this first close above the 9 EMA. You could have taken your full position off right here. But look what happened. The next candle right here, continue lower. And sellers continue to show pressure all day. And then we got another close above the 9 EMA. And look at these wicks right here off the 9 EMA. Now, I think the main indicator you should be watching is volume, but the 9 EMA is definitely a good guide for you in your trades. And look what happened here. You got 1 close above the 9. It sold right back off instantly below the 9. Then you got 5 more candles with wicks above, so there's sellers clearly in the market pushing them right down lower. And you sold off another 30 points on Tesla. You went from, if you took your last contract off here at 660, you went all the way down to 633. And there was still only 1 candle close above the 9 EMA. And right here, and 30 Pacific Standard Time, we finally got 1 candle to close above and 1 more confirmation candle. You would have taken your full position off right here, hypothetically. Like I said, this is all hindsight. We know what happened. It's easy looking at the chart right now and saying this is what you could have done. But when you're in real time, it's definitely difficult to actually process the information and not get panicked. So you got into the position around 640 and you hold all the way down to 1030, about a 4-hour hold time. And let's look at how these contracts will have moved and your profit potential on this trade. Alright, so now we're looking at the on-demand version of this trade, what you could have potentially done here. So we're looking at the 700 puts, and the 20th of May was a Friday, so we're looking at the 0 days to expirations. Now you got a decent sized account, you're about to get in 5 contracts, now we're just watching here. And of course, I'm doing this in a hypothetical situation. I know what's going to happen. But in real time, you gotta really be precise with your entries, especially on 0 days to expiration. If you mess up your entry, you could easily go down, $1,000, $2,000 pretty quickly, especially in a stock like Tesla if you're not careful. The contracts are about $6 hypothetically. We got in there. We bought 5 contracts at 588, and we expect Tesla to break down through here. Now, of course, you should always have a stop loss and take profit. But once again, this is all example purposes only. So we just went forward 10 minutes, and price has clearly dropped pretty substantially. Our entry was around here at 712. We were playing this low of daybreak, and price came all the way down here at $700. Now, realistically, I would probably take off 2 contracts right here because we came into a big psychological level at $700. So let's just take off 2 contracts. So we just took off 2 contracts at 870, and we got in at 588. So we're up about $2,000 on this position. So we're just scaling out some profits to cover our cost basis. Make this trade a little bit more risk-free. As you scale out and profit, it becomes easier and easier to hold your position. I found the contracts are still going up. Price still hasn't broke above the 9 EMA. Now we fast forward about another hour. We came to that bear flag. We probably take one off right there. Price comes back above the 9 EMA right here. So we just took a contract off at $34, it looks like. We just sold one more at $36. And let's fast forward to about 10:30. And right here at 10:30, price finally broke back above the 9 EMA. And we got 2 consecutive closes over the 9 EMA right here. So by this point, I would definitely be looking to take off my full position. Went from 588 all the way up to $57. And let's do this math real quick. Let's say you got a sniper entry. These contracts went up almost 900% in the course of 4 hours and 1 minute, which is pretty remarkable to say the least. Now, moves like these don't always happen very often, but if you're able to catch a move like this and use the 9 EMA as a guide, it's a really great tool, an indicator to prevent you from selling early, and it's going to let these winners work for you. Let's just take this last one off. So we took the last contract off at 56.15. So we got in all the way up here at 708, and we sold down here at 633, or actually about 642 because I broke with the 9 EMA and held above it 2 closes in a row. Now, I've been in some situations where I've gotten into a trade, it broke down, and for no reason at all, I would just sell in the middle of no man's land. There was no technical level here, there was nothing here. I just felt like selling because I was in the profit. But when you have the 9 EMA as a guide, it's really easy to allow this to guide your positions and let these winners work for you. Hypothetically, if you played this, well, you took 5 contracts, you could have made about, $10,000 in this position, hypothetically, if you did everything exactly perfect. And moves like this don't always happen on Tesla, of course. You don't always see 90-point drops on Tesla. But when you do, and use the 9 EMA to your advantage, it's definitely a great tool to keep you in positions longer and keep you and maximize your gains and stretch them out even further than before. Now we're looking at NVDA, another great example, another great stock to trade. This is when NVIDIA was rallying from about $230 all the way to $313. Now on this day, NVIDIA opened up at 272. It broke above the 9 EMA, and it didn't close above the 9 EMA 2 closes in a row until about power hour at 11:55. Now, of course, you could have just bought calls here at open and just rode them all the way up, but that's not always too feasible. Now, let's say you got in late to this trade, you saw NVIDIA on some stock board in some chat room. So you see this bull flag forming, you go for the good high probability trade. It rallies all the way up to $300. $300 is a big psychological level. It makes sense to get rejected. It comes back down and breaks below the 9 EMA. Well, look what happened on the next candle. It never closed above it back-to-back 2 candles in a row. And you can just continue to grind higher and higher all the way up to $313. And then finally we closed below it at 306 on this big red candle. You probably scale out, take your full position off because it's a pretty bearish looking candle. And then we got another candle below it. So you would have been able to ride this position all the way up here from $290 to about $302. If you take calls at the 290 strikes, I mean, you're $12 in the money so far just by riding the 9 EMA. We've taken off your position around right here. On the right hand side of the screen, we're watching the 300 calls from November 5th, 2021, when NVIDIA rallied. So we're watching this position. You see this bull flag forming in the 5 minute, watching the 9 EMA right here. See the 9 EMA, you can also use that as your stop loss as an exit. Contracts are staying at 166 right here. Let's just see what happens. We're getting ready to get in this position. Also, these contracts are fairly cheap on a Thursday, which is kind of surprising, considering NVIDIA was $10 away from 300. But anyway, so NVIDIA is finally starting to break out this bull flag right here. We're gonna get 10 contracts hypothetically at like $1.40. So we're in there at $1.43. We think NVIDIA's gonna break this bull flag right here. So we just fast forwarded 10 minutes. The bull flag obviously broke out. I mean, we know it broke out. And contracts are all the way up here at 305. So we got in down here like $1.40. The contracts are already up 100% in less than 10 minutes. So you should always scale out on the IV pump. So let's just take off like half our position right here on this first initial pump. We took off 5 contracts at 312. Like I said, you should always be scaling out, locking your profits on the way up, just to make it easier to let the winners ride. And let's just fast forward even further. So NVIDIA came up to $300, tapped it like you saw before, and it's starting to pull back a little bit. At this point, I'd probably take off like another 2. I'm securing profits on the way down, just to protect myself and my profits. But I'm still gonna let these winners. I'm still gonna let the last 3 contracts ride for me because I'm already well in the green. There's nothing to really worry about. I'm not losing any money. I'm just giving back profits, so I'm not really concerned about giving back my profits because I already locked in. How much have we locked in so far? On this trade alone, we've already locked in about $2,200, which is pretty good if you ask me, in about an hour of work. The price got all the way up to 313, and you see this giant red candle. I mean, yeah, at this point, you clearly want to be taking off your position, but look where contracts are. Contracts are sitting about 914 from an entry of about $1. Yeah, sure, you gave back about $6 on the contracts, but we're still up almost $2,300 on the last 3 contracts alone. So we take off the final 3 contracts about 814 because I mean, there's clearly sellers pushing the price down right here. So on this trade, our entry was about $1.18. We took 10 contracts, and we profited about $3,600 on this trade hypothetically. And we entered all the way down here at like $1.80 on this bull flag right here. We entered, and just by following the 9 EMA on the way up and exiting. I mean, sure, we could have taken profits up here at 17 a contract, but we exited down here, and we still made over $2,200 just on the final 3 contracts alone, just by scaling out profits and also following the 9 EMA as a guide. Alright, now if this video helped you, if you learned anything, just drop a comment below and leave a like and comment. If you've got any suggestions for me, just let me know in the comments below. Thanks for watching.